Can you hear me okay? Good morning. I am not an accountant. I'm just someone who will talk about the financial markets, but I do not have the degree of accountancy. It's always an honor for me to be invited to participate in this global meeting. I am in Geneva, Switzerland, when it's already the evening, like it's 8 o'clock. So I'm going to try to share. Well, greetings from Mexico, my dear friend Stephane. Good morning for you, to you. Okay, so I will take this moment to present the role and the company I represent in Switzerland that have a partnership with UC&CS as of, well, 4 years ago, because I participated 3 times in this meeting. This is the 3rd time I present. Okay. I'm sorry. Thank you very much, Stephane. We have a partnership. It's a long partnership. I'm trying to organize my slides. So Prime Partners, it is a company of experts, advisors that it's independent from the financial institutions and participates with customers in managing their wealth, consolidating their investments to preserve the successor part. And now we have been active for 23 years. The main idea of the company is to be fully independent with the institutions that sell a lot of products, and we do the best we can to fulfill the needs of the companies. We are a small company, but it's very important in our sector. What we offer the clients is different kinds of services like discretional wealth management and also financial advisory and family office services for any service that one of our clients might need. Well, we also ensure investments in real estate, and we participate in the companies' domiciliation and also in individuals or families that would like to have a fiscal resident different to the one they have in their own country. So the idea is to act with the clients like a lawyer or doctor. We try to behave like an advisor that will eliminate all the conflict of interest and will seek the optimal solutions for each one of their needs. Now, we offer the establishment of trust fide relationship. In the past, it was more to optimize the fiscal part, but today this part fully disappeared, and we have more structures that facilitate all the success of families. And this is, we offer the confidence that the products will not be sold, that they will be taken care of, and we will try to take care the best as possible and offer all the products around the world with fully transparency in terms of costs.
I don't know if you can see this well. This depicts the markets where we traveled. There's a full coverage all over the world, with the exception of some countries in Africa and a part in Asia. Usually we are able to visit and travel all over the world, with the exception of the last years. But I started traveling. I did it 3 weeks ago to Mexico. And this for our customers. They have their patrimony on their behalf at any bank in Europe. Prime Partners offers alternatives outside the United States, and we can act on their account according to the instructions given to the bank. Usually we have access to this information and we can carry out transactions, but the patrimony is on behalf of each individual or family. And now, talking about the company, we're going to make a comment of markets that have been shaken in a very significant manner, especially in 2020, and now with a robust recovery. And I'm going to mention that starting with the theme that was defined for this meeting. And the title was Back to New Normal. I believe that this is heading to a future without historical references. And probably this is not ideal to get back as we were before the crisis of March 2020. There was a strong disruption of the economic cycle, and we are going to seek for something different in the future. And this is exactly what I'm going to explain now. In March, and I think it was on March 16, 2020, the world stopped. Everybody went back home and they stayed there for weeks, and in many countries for many months. Authorities needed to react because this was something new. It didn't happen in the past, and not with this magnitude. So governments decided to lock down. The only way that they found to do so was to develop support programs financing huge unemployment that was caused at that point. They started to offer tax incentives to many sectors that didn't have any sales. On the other hand, this was also supported by central banks with a mass emission of liquidity to prevent market collapse. And this was also to protect the financial system banks and prevent any bankruptcy of a big bank as a result of this situation. So central banks, as they did it in the past, but not with this magnitude, they started to buy bonds to banks, and then they were starting to issue money. There was not a single part all over the world that didn't issue, with the exception of some development banks and emerging banks who do not have this possibility of issuing currency or burn their exchange rates. So we do not know yet what's the situation that we're going to face in the future. There was a huge increase in government indebtedness at levels where there are some big concerns, because we are above 100% of GDP, and some countries even more. Liquidity made low yields for bonds. So we are experiencing a world where there is no foreseeing the risk of lending money. There is a big part of this debt which is financed with attractive interest rates, specifically in Europe, and we are very close to zero in the United States. And this drop in taxes incentivates easy money. And if we look for other investment initiatives, there's an important rise all over the world of other risks. The bankruptcy of Evergrande in China, where we can see that even when everything seems normal, there are many important companies that can fail. And this is not something small in China. It is more or less the bankruptcy of even in the United States. So it is quite important in many markets, but there is so much liquidity that the Chinese government will not allow this catastrophic moment. But we can see also in the future some other accidents of this kind. There's also an artificial reaction in some sectors. This is linked to entertainment. That's an artificial dependence. Some movie theaters, restaurants, etc. These sectors have received important amounts from the governments, and nowadays it is unknown how they are going to repay for this incentive. So right now you can say that this was during the lockdown. Clearly, for the future, usually in regular conditions, we would have to reimburse all this debt. If there's no expected growth or the inflation to eliminate this debt at a technical level, the tax part will have to come into place. And they will be certainly of importance in the future. In the last years, in the formal part of the economy, this dropped a lot, and now we have the income information in many countries. They are showing this information of what's going to be needed for this reimbursement. We can see the substitution of this government, and we can see an increase of debt. We do not have yet 2021 figures, but certainly these two lines should be around 120, 130 of GDP. And those are really historical levels that were only seen around the last Second World War. So there's some trust around this debt. But this is a serious element that is going to be considered in the future. Thanks to Germany, we can see a drop of this debt. But Madame Lagarde applied a policy called in Europe at any price. So we can see that pound increased in a rocketing manner. Mass issuance of liquidity by central banks is that they became the most important investor in the market. Therefore, as you can see here, they have in their balance sheet up to 30% of the PIB. And as investor, I don't know what part of the local debt, but as you can see, this is an important part, and we will see how reimbursement is going to be managed. The debt in the future. The United States worked well after 2008. During that time, they started to repurchase treasury bills in the banks for forex, and this time they also bought companies' debt up to a relatively low level in terms of rating, and they also bought some stocks. So let's see when they want to return this investment to the market, how they are going to react. The issuance is still in place. Every time there's an announcement that they want to start, there are some corrections in the markets. Therefore, on the other hand, always that we have any correction, there's some news that they are still recovering what they have in the market. And the other effect is to keep yields at a very low level. And when they have real interest and there are negative results here, so in case they have cash in their balance sheet, we need to guarantee here a debt of almost 2% all over the world. This is also encouragement to assume risks with this cash in order not to have it in companies' balance sheets. And there's kind of an inflation of real values. There was a general increase of real estate sectors, and not only as in the past only in big cities like New York, Paris, and other, but also in some other regions. And at long term, this is going to be a problem for people who want to rent or probably buy a house, because current prices are complicated all over the world. And in China, this is also part of this inflation with real values. Now also indexes are in their maximum historical. There are many indexes that were above the level of March 2020, even when the PIB or GDP statistics did not recover the crisis of 2020 in a more indirect manner. When we are thinking about cryptocurrencies, this mass issuance of liquidity, it's very easy to calculate. This is GDP in Europe. In Europe and United States, it's more or less 20,000, just to make it simple. And we can see that both central banks have almost 30% of GDP. Those are huge amounts. The transition that we're experiencing right now is that we are getting adjusted to this situation. That's the post-pandemic era. And now we are reconciling supply and demand. All these issues taught us that there's an interdependence of the Western world to Asia and China particularly. Then as all the production that we need from China needs to undergo through ships or sea, there are differences in time between producers and purchasers, causing some inflation. There's high inflation in some countries all over the world. Also, we expect a sector redistribution because as you can see, the digital part, the companies took advantage of this crisis because this helped to work in a different manner, working from home. And this possibility was well accepted, changing the way of traveling and also working. It is also being implemented a rebalancing labor terms. In the United States, we are seeing, as well as in Europe, there were many grants to workers losing their job that they don't want to get back very quickly to the labor world because they are happy with these grants. And I believe that if they do not cut them, they will live on what they receive from the government. In Europe, a more social region, this support allowed them to have a good standard of living. So now governments are looking for ways to remove these grants to workers. We need to get back to economic growth. It's easy to say, but not easy to perform. It's going to depend from many elements all over the world. And this is going to be needed to decrease this debt before the economy. And also the integration of some pandemic elements. Life changed for a lot of people, social relationships, and I'm also going to mention the environment because during these months we have had a cleaner world, less pollution, less noise. We need to take into consideration what we had in this short past to keep something for the future. We will also need financing to keep the new debt in place. And one element which almost disappeared was the environmental emergency. We had a very complicated summer all over the world with fire, strong winds. In Switzerland, we had almost 2 months of rain, and we do not know if this is linked, but we can see an acceleration of the environmental part, and the sole reaction is to produce cars of 2 tons like Tesla. And I don't think this is going to help a lot. Energy production is not so pure in these cars. And we can see another crisis, which is energy crisis. We can see a high increase of energy prices in Europe. They are afraid that there is not going to be gas for this winter, that we will not be able to heat homes. Price increased a lot. So this is going to become something really expensive, and a lot of electricity is produced by gas. So, as you can see, it is not in the goals of reducing CO2. Independence of United States and Europe before China is that clearly in the past a big part of production was exported. We also exported CO2 production. We can see very clean countries because what we produce right now is produced in China or in Asia. And recently there was a huge increase of freight at the Suez Channel with that ship that blocked the channel, and then ships started passing through South Africa 15 days plus. And then there were some cases in China. Ports were closed. And we see a very complicated situation for making transportation of all China production up to Europe. There's a scarcity of semiconductors. It is difficult to buy new cars with the electronics because there was a scarcity of medicines as well. And then there was some disturbance in China with everything related to big data. This is crucial information for the world. And we can see that they want to buy a lot of big data and not to share theirs because their data is really important. And we can see that those companies that were in the United States want to leave the stock market, and Americans don't want to have them in the stock market. This is something really sensitive. And also environmental emergency. There are some plans of paying CO2 of products imported from Asia when they get into Europe. So as China has the same competitivity than Europe companies that need to observe stricter standards. And there are some challenges that collective or herd immunity, once half of the population has had COVID, we can expect for some immunity, but there are some other theories. There were two different policies. One saying that US and Europe were thinking that they were going to vaccine their population at once, but we can see that it didn't work like that. There's some part of the population that won't get vaccinated, and now they are in wave number 4 getting into hospital, and vaccination rate is of about 60%, and then it stops. There is a third part of the population not wanting to get the vaccine, so probably they will have to take into consideration this fact, and they will have to manage this part. In Asia, there was particularly lower vaccine, and they made a lockdown. So every time there's a case, a part of the country is closed, and they make sure that there's no virus spread. But this is really complicated to manage. I think that the closest, the country which closed more was Vietnam. They have some cases though, and a very short part of the population is vaccinated. Another important challenge is that in 2019 there were many social disruptions. Remember Hong Kong, France, Chile. There were several parts in the world where there was some unrest by the population due to life cost increase, high unemployment. Many parts all over the world were almost in civil war. We're talking about China, for example. And now with the pandemic, an important part of the population got back. Those that left from 2000 to 2020 that left the poverty levels, and now they returned after the pandemic. Now governments will have to manage this social unrest, not to disincentivate investment. Another challenge, and I already mentioned this one, and I'm not going to talk a lot about this, the return to these positions by central banks. And certainly as we got in this interest rate rebound, which is still weak, but as inflation returned, certainly if inflation is confirmed, I am sure that they will have to start to increase interest rates at the short term. And this is not expected before 2022. And now I am getting back to my favorite environmental part. Years ago, there was an agreement in Paris saying that 2030 was going to be the deadline to get back to CO2 emissions of 1970, and we can see that if this pollution keeps on increasing, the situation will worsen. If you go to Switzerland, you will see that glaciers are melting. They are almost disappearing.
This was like a phenomenal change, and all the projects that were ready to make the conversion or vanish, that's only debt. I don't know how they will be able to react. Now there's been efforts with solar energy and wind energy, but we will still need something for the night. I don't know how we will be able to solve the environmental part. Well, perhaps several meetings will take place among Europeans this year, but all the countries are above this. The perspectives, currencies, there was a strong dilution of currency, but almost equal to all of them. We do not see an important volatility between the main currencies because almost all of them put efforts to bring liquidity into the market, but there was a dilution. And I think that the dollar confirmed the role in the reserve, because 2 years ago, talking about the currency was one of the most important currency of the blocks, and we saw that the dollar, thanks to this crisis, there's still the main currency in which all the raw materials are based on it. This currency, S and Y, that do not have a dilution because the amount of gold is almost the same 5 years ago, so the gold production is relatively small, and it could be an interesting diversification in the wealth. These years, the days have been dropping because of there's risk of inflation that would make the interest rates increase, that will increase the cost of maintaining gold in the portfolios. So I think this is going to be a temporary situation. Fixed income, I think this is a copy-paste of last year, more or less, is that we do not like to invest in an asset where there's risk, because to buy bonds and to lend money to receive a zero in exchange. So there's an important risk of stopping the fixed income. At short term, it's almost at zero, and to obtain yields more or less yields, we need to decrease a lot the quality a lot, and more that it is a specialist market of certain companies, but we wouldn't lend a lot of money, and neither there are no companies, and let alone the government. Well, variable income also, this was mentioned last year, the new alternatives, the TINAs. There is no alternative. This is the only allocation that we can do that will protect us from inflation and make us participate in economic growth. In this level, there are some risks, but we do not really see a bubble. I think that we can expect a certain volatility, but every correction could be an opportunity to increase their exposure to variable income. And something interesting when we talk about pollution, there's increasingly more ESG investment that ensure that the company manages the business in a way that would protect its employees, that does not cause pollution, and also to have ethics. And we saw that certain sectors have to pay a premium to finance themselves. I think about the oil sector because many investors that do not want to lend companies or sectors that have the potential of killing us in the future. So as there's more ETF in this century, in the future, they will be important. Assigning their wealth or money to countries, sectors, or companies that have this same concern. To end, what are the risks that we can expect? Because for sure, there's always economic crisis, and we need to think what could happen. I think we hope that we will not have a new variant of the virus that will go above Johnson, Pfizer, because we need to restart all over again. And this risk is relevant because we have less than half of the world that is vaccinated. So the virus is circulating. It could develop something new. We still do not see. There was fear about the virus in Peru and the Delta, but the vaccines have been resistant, and with experience, there would be something available if there's a rebound. Also, the rebound of yields, it is not still confirmed that the inflation will come back, but in the new normal, we need to pay. Interest rates could be a problem for many companies. In a second moment to governments. And the so-called leverage I mentioned before, the cheap money that allows projects or products to heaven with no limits. And the default, and we may have a crisis that the one that we had in 2013. So we will see how the addiction of the economy will stop the perfusion of the liquidity, because it's still there, and we do not know if we can stop this one day. Those are the Damocles swords. So each crisis is an opportunity for new investments or not investing during period of time. So far, everything that has been done was well done. So let's see if one day we can restart working. And to earn incomes without a risk.